Well, everybody, welcome to the latest Glass Half Full. Sonu, is it over? The time we are recording this, we actually have potentially some good news out of the Middle East. Listen, a long way to go, we get it. But markets have a funny way of kind of adjusting and sniffing out better news. How do you want to take this? Where do you want to start with this one, Sonu?
I would say it's probably over for all practical purposes. You think, okay, there's a 2-week ceasefire in the Middle East that maybe, depending on reports, it's unclear what the U.S. has agreed to, what Iran's agreed to. But Bottom line is, we have a ceasefire. At least the U.S. is not attacking Iran anymore for the time being. And you think 2 weeks from now, I don't really see what could change to upend that dynamic. So I think this continues. And so we may be in a tentative pause here, tentative ceasefire for longer than 2 weeks. Maybe that's my optimistic glass half full view talking. But you look at oil prices, and what matters, right? Is oil moving through the strait?
Sure.
Yesterday, the U.S. benchmark for oil prices, WTI, West Texas Intermediate crude oil prices hit $116 a barrel. Today, it's down to 92. But before the crisis, we were at 60 or 65. Sure. So we're not back all the way. But that, we always like to look at markets. What is the message of the market? The market's telling us the immediate crisis has probably passed, but we're not back to normal yet.
No, we're not back to normal. And we're also aware of the time we're recording this. It's going to be a couple days before everyone sees it. So hopefully most of what we're saying is still fairly accurate. But what do we know? What do we know? So Sonu, we've had a heck of a run for 3 years in a row. This time a year ago, we were talking about Liberation Day and the potential close to a bear market. Stock market crashed 10% in 2 days, almost like exactly a year ago from the time all this stuff is happening. Then we got through it, right? And it's a midterm year. They can be choppy. They can be volatile. I think, we just had a 9.1% peak to trough correction on the S&P 500 from late January until, I guess till just recently, sometime recently, late March, I guess I'm going to say approximately. And now we're bouncing, and I think, most years of volatility, a lot of these things are concepts we've talked about, but the underlying pinnings of this economy, stronger earnings, stronger profit margins, a labor market that's hanging in there, a consumer that's still hanging in there. Not saying it's perfect, but those are all positive things, and we're not minimizing what's happening out there. But from we put our investors' hats on. Most years have scary headlines. Most years have bad things that happen, but also most years come back. Now, one more quick one, Sonu, I'll go to you. We're looking at potentially a 6-day win streak on the S&P 500 time we're doing this. I was just playing with some numbers. Like when you have a 6-day win streak, Sonu, the whole years usually does well. And I get it. We're taking real small sample sizes. But years like 2015, 2011, 2022 did not have a 6-day win streak. Those were 3 of the only years, last 20 years, we actually were down. So just something kind of fun to think about. This blast of strength we're seeing right now, it's kind of reminiscent of what we saw a year ago that kicked off a good bull market. What are some other glass half full things we should think about?
Look, one big thing is when you get to the economy, the labor market is doing, I would say more than okay. The unemployment rate has gone down to 4.26%. Now we have been in the camp that the labor market has been fine for several months, while a lot of others have said, no, it's really weak. There are cracks. It's delicately balanced. Yes. It's not a great economy if you're looking for a job, but it's improving, right? If you have a job, the probability of getting laid off is still very low for now. That's a big positive. Companies maybe don't want to hire because they overhired in 2021, 2022. There's been more economic uncertainty because of tariffs and now the crisis in the Middle East. So companies are saying, you know what, let's hold back for a little bit, right? Maybe we wait for better times ahead. We wait for more demand, things like that. But that could be happening around the world, especially if the global economy starts to improve from here on out. If the crisis is really behind us, we could see that. That's also positive for profits. Now, I will caution, when we get actual economic data for the first quarter, and even in the second quarter, be wary. This is where we have to sort of not quite disconnect the economy from the market, but anything that is going to be inflation adjusted. So when the headlines talk about real GDP growth, productivity growth, that's all adjusted for inflation. Inflation's going to spike in March and April. That's going to sort of torch, pardon my language, that's going to torch real inflation adjusted numbers. But what matters for profits and revenue, Ryan, as you were saying, is nominal numbers.
Yep.
Right. And the other side of it is that the U.S. government has a 6% deficit right now. Deficit to GDP is about 6%. What does that mean? We're a $30 trillion economy. 6 to 7% deficits means the U.S. government is pumping in close to $2 trillion.
What's that number? 6% of 30. I don't know. How quick are you when you do your math?
It's about 1. Is it 1.8 to 2
trillion?
I
think 1.82. Close enough for government work. Yeah, right around there.
$2 trillion. The U.S. government is pumping an extra $2 trillion into the economy every year. That's huge, right? Where does that go? That goes to profits and revenue, right? And that's a big reason why we still, I think one of the big reasons why, I think the outlook for the stock market is still good.
Yeah, and some of the concepts you just talked about, we were talking about well before this war started, right? I mean, these were things that we were talking about that were definitely in play. I guess there's a couple. We probably need to wrap it up soon here. I'm trying to think how to really wrap this up. I mean, listen, there's still a lot going on. There's still things that can change. I think one of the things that just I can't get over, Sonu, it is a midterm year. I just found it hard to think that this, I get choked up talking about midterm years apparently, that this conflict would go much further into the summer, much deeper, because listen, it is what it is. We see the polls, and people aren't really crazy about this, right? So
gas prices have gone up to
gas prices have gone up.
Fly around wide average. Diesel prices are up to 560.
Yeah, right? Airline tickets have gone up. I mean, the different things have clearly gone up. That isn't making people warm and fuzzy. But hopefully we can get through this. And again, markets adjust. I mean, fun stats, the right way to put it. But literally the S&P, no, wrong one. The Dow Jones Industrial Average has been around since 1896. Sonu, its best year ever was in 1914. It gained 86%. Little something called World War I took place in 1914. So we're not saying war is good. I'm not going that route. But we're just saying when you look at some of these things, it's not quite as easy as you think. And it's just incredible. History doesn't repeat itself. It often rhymes. Mark Twain used that one a lot. I think it's Mark Twain. We'll give him credit. He gets credit for all those quotes. A year ago, we're worried about tariffs and how we're going to go into recession and all that stuff. And it happened right March, April timeframe, middle of April. Then we bottomed and rallied. Listen, there are some similarities with some of that, what we're seeing. Sonu, we've probably gone plenty long. Let's wrap it up. One more comment from you, then I'll bring us home.
Look, to your point, we're not saying war is good, but there's a lot of rebuilding that has to happen. There's a lot of rethinking that may have to happen. You and I were talking about this after this. What do countries in Asia, especially maybe in Europe, and even the United States, say over the next 2-3 years to say we need to make ourselves more resilient than having to rely on a single choke point called the Strait of Hormuz? I'm not saying it's going to happen anytime now, but that leads to its own set of potential opportunities, for companies, for profits, for revenues, and for the stock market.
No, exactly. I mean, that was 20 miles, right? Approximately the strait. You could argue that's the most valuable part of the whole world right now because they can choke off the global economy as we've seen. But I'll wrap it up like this. I mean, similar to building what you just said, similar to COVID, right? When everything happened with COVID, as devastating as that was, the U.S., we realized, wow, if we need chips for something and it's in a factory in China, but they're on lockdown, we can't get our chips. We want it now. Maybe we're going to pay a tad more for that chip. All the onshoring, all the different policies have been put in place because of COVID. Now we're building it here a lot of times. Not always, but a lot of stuff we're building here now because we don't like waiting on somebody else who has different policies. What's the rest of the world going to do? I think there's going to be a race to find other ways to get oil around the Middle East than just a strait. And like you and I were talking before we started, that might take years, but then again, no time like the present to start that, so we don't have to worry about something like this again anytime soon. Let's hope. So everybody, again, this was the latest Glass Half Full. Is it over? We're not saying officially, but there are some lot better hopes that it's going to be over very soon. And the market, again, will sniff that out and rally well before the news kind of catches on, which is what we think we've probably been seeing, honestly, already. And with that, we'll see everybody next week. Take care. Thank you.